I wonder if you might tell us why we've seen the weakness in oil prices over the last several weeks, and is it possible for it to be sustained?
Hey, Dominic, thanks for having me. Look, heading into next year, we foresee a meaningful increase in non-OPEC production. We're getting growth in Guyana, Brazil, Canada, and of course, the U.S. has delivered a phenomenal year in terms of production growth, scratching 1.5 million barrels a day for the first time in a while. This is going to be one of the best years, 2023, for U.S. oil production, crude and liquids. So America's producing a lot of oil, and OPEC is facing the dilemma as demand slows down of whether to accommodate some of that demand growth or just fight another battle for market share.
This is one of those scenarios where if OPEC and its partner countries are showing signs that they cannot get to some kind of an agreement, that oil prices could slide further. Do you feel as though some of the countries that are maybe holding out, we've reportedly heard that it's some of the African countries like Angola, others, that are perhaps wanting to pump more oil out there? Is this going to be overall bearish for the oil prices that you see in the coming months as well?
Well, I think coming into the meeting, it was never going to be easy to force some of the free riders in OPEC Plus to essentially do nothing and have Saudi Arabia do all the heavy lifting. Remember, the Saudis are now producing just under 9 million barrels a day. So that's one of the lowest points of production in more than 10 years, with the exception of the COVID period. So I think the Saudis are coming back to the table and saying, okay, we've been supporting the market for a while. We want you guys to pitch in a little bit. But I think ultimately they'll get to an agreement. But that the fact there'll be headlines over the course of the next few days certainly sets us up for a lot of volatility into the final decision. I still believe they'll cut, and I still believe they'll support the market. So we maintain a $90 a barrel scenario for next year on Brent, a little lower for WTI. But it's all contingent on OPEC maintaining supply tight to accommodate slower demand, and of course that surge in non-OPEC output that we continue to see.
Francisco, what exactly does the crude curve tell you right now with regard to the futures market? Are you seeing signs that prices for crude in future delivery months are indicating any kind of a movement longer term for oil prices? Is that backwardation still intact? And do you think that it's going to foretell perhaps more stable oil prices in the coming months?
Well, I'm glad you asked that. I think one of the critical things that Saudi Arabia and the rest of the group have been trying to do is make sure the market remains in backwardation, where spot prices are trading above forward prices. And I think it's something they've done a really good job at. In order to maintain that backwardation, however, you must make sure that the market is in a slight deficit and that inventories are below the 5-year average. And that's exactly why this cut is so important. If OPEC lets inventories build, the backwardation will disappear, will go into contango, and the spot price will come down pretty hard, I think, relative to forward prices. That would be essentially the trade. If OPEC cannot agree, we'll develop a contango, a spot price trading below the forward price very quickly, and it'll become quite pronounced. We've seen that in the past when the group cannot agree to something. So that's definitely key to watch. What happens to inventories is what OPEC is really all about. That's what they're trying to do. Keep the curve in backwardation, discourage more investment on a forward basis, but still collect the benefits of relatively high spot prices.